felt like the presence of God just stopped everything. And we wrote a song called The Blessing. And it's straight from Scripture. And it's the heart of the Father over us as His kids. And we're going to sing it this morning if that's okay. And this is a blessing over you and your family and your children. So just receive this morning. Just put your hands out in front of you. Turn your heart to a place of just receiving the blessing of heaven from God Himself over you this morning.
866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas.
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give us the gift. And it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, Larry, want to get rich quick? Good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday.
Goodness gracious, I'm glad I put my headset on and heard that. Anyway.
Yeah, I was going to tell you.
I'm going to put that in the dumpster. All right. All right, guys, let's open with a word of prayer. If you can't see my screen, go to the home page at cfrn.net. On the right-hand side, click the big microphone. Follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. Now, when you join that way, you have access to the chat box, you can ask questions, you can participate in the discussion. So that's the best way. But if you're away from the office, away from your own desktop, just point any internet-connected browser to cfrn.net/live. There you'll find a live, real-time simulcast of the show as it unfolds, minus the chat box. We also stream live during the show on Facebook, YouTube, and Twitter. And CFRN Radio streams around the clock, 365, since April of 2005, streaming the gospel to the four corners of the universe. You can always pick up the radio stream just by visiting the home page at CFRN. CFRN.net. Okay. Father, we thank you for all of your blessings in our life, for your mercy, for your grace. We thank you for being a God who never sleeps. Thank you for always being here for us, even when we're not always here for you in the way that we know we should be. Thank you that you are love, and that you want the very best for us. Thank you for your promises that you've given us, promises that never change. We as a people, as a nation, as your children, we're feeling a bit overwhelmed, God. Please send help. Help us to rest in the fact that you and you alone know what is best for us. Forgive us for turning away from you and always trying to control the outcome and the situations in our life instead of just letting you handle the situation. Of course, we have to take our part. We have to act. We have to move. We have to get off the couch. But we need you, God, to order our steps. Forgive us for all of our failure and shortcomings, because we need your help. The Bible says you're not the God of confusion, but of peace. Our country is very confused at the moment. We've never seen such division. We need your help. Help us to feel your love and your comfort. Help us to be a source of love and comfort to others. Help us to just be still for a moment and know that you are God, that you'll always take care of us, just like any loving parent takes care of their children. Your word says that we should cast all of our anxiety, all of our problems on you because you care for us. It doesn't seem fair or right to a man, but you said that's what we're supposed to do. So today, personally, collectively, corporately, we turn all of our burdens, all of our concerns over to you, and we just ask, God, that you would guide our every step. Help us to be attentive. Help us to hear your voice when you speak. Sometimes, God, we get so captivated with our own voice and our own thoughts and our own ideas that we miss you in the midst of the problem that has us so overwhelmed. We thank you for all your blessings. We turn this day over to you. In Jesus' name, amen. Amen. All right. Happy Wednesday, wherever you are. Let me give you the numbers from around the world real quick. These are the cash markets, or the indices, as they're called. John is going to join us about 10 minutes to the top of the hour. Garrett's going to join us at the top of the hour. At least that was the plan when I spoke with both of them earlier this morning. Okay, so here in the U.S., currently the Dow's up 315 points. NASDAQ's up 39. S&P 500 up 20. And the Russell 2000 up 16. We talked this morning in the pre-market strategy session about the NQ being the one showing the greatest weakness. The Dow's up over 1%. The Russell 2000's up over 1%. S&P 500 is up a little over 0.5%. And then the also ran would be the NASDAQ, up a little over 0.25%. Now, in the commodity basket, we had crude oil inventories today. Crude up $1.29, trading $42.99 last. That's a gain of 3%. Gold, oh, go gold, up $35.70, trading $20.5670 last. That's a gain of 1.75%. And then there's silver, high-ho silver, trading $26.90 last. That's a gain of almost $1, which is, for silver, a gain of over 3.25%. Now we've got an 87-cent move today in silver, a $1 move in silver. If you're trading the futures contract, that has a value of $5,000 per contract traded. Go silver. All right, in the Asian markets at the close, Nikkei down 58, Shanghai up 5, Hang Seng up 155. No movers and no shakers there. And in the European markets at the close, FTSE up 68, DAX up 59, CAC up 43. The only mover and shaker there would be the FTSE, which is up a little over 1%. That's going to give us a mixed day in Asia, a quiet mixed day in Asia, a green day in the UK, pretty quiet there as well. And it's a big green Radio Wednesday so far here in the US of A. Not a big green day, but green nonetheless. Now, when I take the charts here in a bit, I'll show you where we are in relation to where the market is trying to go, which is the all-time historic high in the S&P 500. But let's go to Michael and get a recap of everything that happened this morning in the live training room. When he's done, I'll come back. We'll get the Concierge Trade Alerts done. We'll get the Logic Alerts done, and then we'll talk to John. We'll talk to Garrett. All that and answers to your questions. It's all yours, Michael.
Okay, I got it. All right, here we go, guys. Good afternoon. Today is Wednesday, the 5th day of August 2020. Just check that. Yeah, Wednesday, the 5th day of August 2020. If you have not taken a free trial with us, go to the homepage at CFRN.net. And right here it says free 5-day trial, no credit card required. Click on that, and it's going to bring you to this page, eminitrainingschool.com. On this page, all that we ask for is your name, your email, your phone number. You can tell us your biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button. Once you hit the send button, you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click that confirmation link, we don't know that you took the free trial. All right, next recap. Okay, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, as I said, is the 5th day of August 2020. Today we made 4 ticks in the euro and 65 ticks in gold. That put us at plus $675 a contract on the morning session. Today it took 17 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 10 trades today. So, on the month now, we are at $1,258 per contract. That's over 3 trading days, and we're averaging $419 per contract per 2-hour trading day. And as you'll see in a moment, I miss a bunch of the trades. On the year, we're at $54,569. That's over 143 trading days, averaging $381 per contract per trading day. Okay. Now, let's get into it. Wow, we had some good moves there during the break. Really nice moves. Those of you who are not trading futures right now, I do not know why. I mean, you don't have to be using, the CFRN methods, but there's just so much opportunity. And, we want to educate you on the best way to do it, as far as we're concerned. And you can take it from there. Now, started out right here. We had this perfect trade right here. Down close off the BBC. We had beautiful barrier separation down here with the red on the cycle. We hit the BBC, gave a down close. At the time, the cycle was the MA1 was just turning blue. But this trade ran from, let's say, 2055 down to 2050. So this was like a $400 to $500 trade. And that happened all in 30 seconds. That was how the day began with gold. Moving on, though, looking at the YBR trades, you got to consider those. But there was a bounce off the BBC right here that would have been a break even. Then it started to change directions. There was a YBR right here that gave some profit. We had to break dynamic resistance, but there was a long right there. And that was all in the first 5 minutes. You know, and then let's see. My first trade was right here. I went long right here and I picked up 10 ticks on the first trade. Okay, and then it got a little bit choppy, and I was doing my best to advise people what to do and what not to do during that chop. There was blue on the YBR right here with an up close for a nice long trade. Red on the YBR here with a down close, bearish separation for a nice short trade. Right over here was a close. This would have been a close below the trend line. I didn't draw the trend line, I just eyeballed it, but the trend line would have been like that. Okay. Here we had red on the YBR with a down close, but we didn't really have any bearish separation. It went down anyway. Then it changed directions. We bounced off the BBC right here. We had a break even. Then we picked up 13 ticks on this to put us at plus 23. We had a break even over here. Let's see. Blue on the YBR here with an up close for that big move up. Then this one right here, we picked up 14 ticks to put us at plus 37. Over here, we didn't get filled on this one for the short trade right there. We had red on the YBR with a down close. Bearish separation for a beautiful trade right there. Another red on the YBR with a down close with bearish separation. This one, the cycle was going up kind of steep though. Here we picked up just a couple of ticks on the long side. And here we picked up 10 to put us at plus 49. Okay. Right here was a shorting opportunity that it put some heat on you, but eventually it went down. See, the cycle's going up too steep here. That's why I wasn't saying anything about anything in here. You know, you could have taken a quick momentum trade here and there. Right here, we picked up another 6 ticks to put us at plus 55. Missed a long trade there and there and there and there. You know, I was pretty focused on gold this morning, and every time I looked away from gold, something like this would happen. And so I tried to bring my focus back onto gold. See, we had another short trade from right here. And a long trade right here. We picked up 10 ticks to put us at plus 65 on the morning. And let's see, during the break, we had a long trade right there and there. And some good movement on the downside. A short trade there and there. And there. And there. And there. And there. And so it was killing it on the short side during the break. But anyway, we ended up with plus 65 on gold for the morning session. On the euro, well, let's just go over the whole thing. We only took one trade on the euro. But if you start at the beginning, that was pre-market. Then the markets opened up, and we didn't have anything. Well, we really didn't have anything there. Here we had a YBR long. Here we had a YBR short. Here we had a YBR short. We missed this trade. This was a trend line trade. We picked up 4 ticks here. We missed a trend line trade there. And during the break, there was a YBR short right here. And that was the euro today. Crude oil had some pretty good movement today too, but I didn't participate in it because I was so focused on the gold. But let's go over it. Okay, starting out right here, we had a YBR short. Then We had to break this dynamic support, so we didn't have that, but we had a bounce off the BBC right there. We had a YBR long and a bounce off the BBC right there. And we had a YBR short right there, a YBR long right there. This was a trend line trade going down right there. And we had a trend line trade going up right there that I missed. You know, I know there was some movement on the crude, but I didn't trade any of it. We had a YBR short begin right here, another one right here. But this one was kind of ugly. I mean, it worked out, but it was still not the prettiest trade. This was a YBR long that would have been a break-even trade at best, possibly a stop out. This was a BBC trade. This is during the break now. Give a nice short right there. And another one right there. And that was it for crude oil today. Now, let's look at the ES. I didn't trade the ES all day either. Well, all morning. The day's not over. Here we go. See, I'm looking at the slingshot. As I move my mouse across, I'm looking at the slingshot and looking to see where trade opportunities were. Now, the slingshot in conjunction with the YBR and the trend lines and the BBC is what makes all the trades happen. And, you know, like right here, it could have gone long right there, but it would have been a break-even trade. Could have gone long right here. Would have been maybe a little chance for profit. But there really wasn't anything today on the ES. And that's not to say that it didn't move. Now let's look at it on a larger time frame. You see, we went from down here at 9:30 all the way up to there at 11:15, and it's pulling all the way back right now. Actually, we're at a point right now where it's really going to make a decision. If you look at fibs, this would probably be 62% right here, and I will check that just for your benefit. Hang on. Drawing tools. This one. Yeah, that's where we are right now. 62%. So if it's going to make a decision right now, you know, whether it's going to turn or not, now would be the time. But this is the 15-minute. If you do it on the 30-minute, we are probably just hitting the BBC. So it's really decision time right now if it's going to continue up or if it's going to completely fail. All right. Well, that was the morning session. Okay, so there was a ton of opportunity, not on the ES, some on crude, a little bit on the euro, but it was all over on gold. And, you know, gold just gave another YBR short right here. Right on the YBR, down close, bearish separation. If you guys aren't trading futures right now, these are unprecedented times. And you should be all over this stuff. And if you're not, and you want to talk about it, then send an email to support@cfrn.net and I'll squeeze you in. All right. So today, as I said, if you're going to read the spreadsheet, you read all the CFTC risk disclosures down at the bottom. I have to say that. Today is the 5th day of August, 2020. Today we made 4 ticks in the euro and 65 ticks in gold. All right. That put us up $675 per contract on the morning session. Today we took 17 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 a contract. And we took a total of 10 trades. So on the month now, we're at $1,258. That's over 3 trading days, averaging $419 per contract per trading day. We are now on our 118th consecutive day of getting the goal. On the year now, we're at $54,569. That's over 143 trading days, averaging $381 per contract per trading day. Okay, and that's per 2-hour trading day. And as you saw, I missed most of the trades because once I get my goal for the day, then I go into training mode. All right, so if you have not taken a free trial with us, go to the home page at CFRN.net. Right here it says free 5-day trial, no credit card required. Click on that. And here we have this thing called eminitrainingschool.com. And all we ask for here is your name, your email, and your phone number. And you can tell us your biggest trading challenge so we can tailor one-on-one training specifically for you. Hit the send button and you'll be sent a confirmation link. You must click on that confirmation link. Okay? If you don't click on the confirmation link, then we don't know that you took the free trial. So make sure you click on that link. Okay? All right. And with that, we can pass it back out to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I am ready. And Valerie, we had an issue with audio early on. So if you recorded on your end today, once the thing's done rendering, could we please switch out your recorded version with the... We're back online now on YouTube, but the first part of that got chopped off. So if you could...
Yeah, mine's the same way.
I'm sorry?
I was hearing the same thing.
Yeah, it was all garbled
I'm
up.
talking... Well, yeah, that you can just clip out if you want. But what I was talking about is the part where Michael was just doing the recap. I think that got lost on the internet feed. Maybe if somebody listening through internet, let me know. I mean, listening through YouTube or watching through YouTube, if you could send Valerie or me a message in the discussion group and just go, no, I couldn't hear it or see it, or yes, I did, then we'll know whether we need still chopping off that front end. Might not be a bad idea. I got to fix that. Okay. All right. Recap of the recap, Michael.
Today, 17 minutes, one trade, $100 per contract. Ding.
That's for the bingo.
There it is. There it is.
Yeah, I was just trying to
everybody
reach two
waits to hear
machines
that, you know. Everybody waits to hear that.
All right. Yeah.
All right. It's all yours.
Bell tolls. Okie doke. All right, guys. Coming up top of the hour, we're going to talk to John, talk to Garrett. In the meantime, we'll try to get through the Concierge Trade Alerts, the Logic Alerts. On Logic, we're at a current sample size of 4,771 alerts. 20% have been stopped out on average over 105 weeks based on not risking more than $300 per contract per trade. All of our members learn a very simple 3-step methodology for placing the stop. Okay, with the alerts, we don't use a fixed percentage or a ratio or the ATR. We use market structure. We let the chart tell us exactly where the stop loss needs to be. Now, using that 3-step methodology, if it turns out that a trigger on an alert requires more than $300 of risk per contract per trade, we pass. We wait for it to trigger a second time where there's a better risk ratio, or we look at a different alert, different market. We only want to participate in the highest probability, lowest risk trades that we can find. That's our goal, and even with all that work, 20%, week after week, over 105 weeks. That's what we've averaged, okay? Now, being stopped out. Now, the logic alerts are based on current price action, delivered 24/7 via the private Telegram channel. Concierge alerts are based on historic price action. That's a static report, which I'm going to give you a chance to take a screenshot of here in just a moment, if you'd like. That comes out shortly after the Globex Open each evening, and we'll see today if we had multiple triggers. Most days, the alerts will often trigger 2, 3, 4, 5. even more times over the course of one session. Okay? And each one of those unique triggers will require its own unique stop loss based upon market structure and the three-step method that I teach you. Okay? It's all very simple. It's nothing complicated. You don't have to buy any additional indicators or oscillators or anything else. You just let price tell you what's going on. Okay, so far this week in Logic 247, this is where we stand. As of 10 minutes after the show started, we've issued 57 alerts, still waiting on a disposition of 6. 11 never triggered. We've written those off. That gave us 40 actionable alerts, of which 6 have been stopped out based on not risking more than $300 per contract per trade, less when possible. So out of 40 actionable alerts, 36 being stopped out, that's 34 opportunities since the market opened Sunday night at 6 p.m. Eastern to get your goal for the day. All right, the logic alerts. I'm going to drag those up right now so you can grab a screenshot if you would like. Last night I got them out 6:30 Eastern. Markets open at 6. Now the logic channel opens for business Sunday night at 6 p.m. Eastern. It stays open around the clock till 5 p.m. Eastern on Friday. What you're looking at now, the static report, that is in conjunction with the logic alerts. Concierge based on previous price action, logic based on current price action. And when you see both of them pointing a finger at the same important price, important area, that's always a good opportunity to find, potentially find, a high probability and low risk trade setup. All right, let's jump straight to the chart. We'll go to the S&P Daily first. All right, this morning we made it about halfway through, no, not quite halfway, pretty close, through this window of opportunity that we've been talking about for a while. We had an issue, not an issue. If I scroll over, okay, this first rectangle, as the market put in a new all-time historic high back in January, when it couldn't go any higher, it pulled back into support at the BBC. The pullback held. We went on to put in a new all-time historic high right here. So that's what this rectangle is about, because this is an area for potentially good resistance. The next rectangle is based on this bearish cross. Okay. Once price got below the BBC, that was our first indication that we were looking for lower prices. Remember, we had just put in an all-time historic high and then another all-time historic high. But this candle right here said something's up. There's something different about this picture. Notice every one of these candles is connected to the BBC. On this candle, we opened and closed below it. And look where we closed, right at that level of support. Following session, we gapped higher on the open. We closed here. This candle closed at 32.20.75. This candle opened at 32.25.75. Let's see, this one opened at 25.75. This one closed at 20.75. So it was a 5-point gap. So we had a green candle on this day. And then it reversed right here. So taking out the low of this candle, which means taking out the low of this candle, that set the stage. It was all confirmed by the bearish cross. So we've been saying now for months, that when price gets back up to these areas, those will be areas for good resistance. So the first one that we had to deal with, created by that swing low, is right there. That sent price back to the BBC. The BBC held, sent it back up, where we ran into that same resistance again. Tried and failed, tried and failed. Finally got through it on July 20th, which took us up to the next area of potential resistance. We tried to get through it, failed. Ultimately, we came back to the BBC. In this context, we talked about the hanging man being more of a continuation signal than a reversal signal. And then we moved right on up. We finally took out this swing high, closed above it, closed above it. Now we're into that window of opportunity, pointing north at the all-time historic high. So that's where we are right now from a daily perspective. Last Thursday night in the workshop, we talked about opportunity overhead. So today's Wednesday, Tuesday, Monday, Friday, Thursday. Friday would have been Wednesday, Tuesday. Yeah, it was this candle where we talked about 3270 up to 3287 being a nice window of opportunity. Now we've entered into the next window of opportunity, which is 3303 up to about 3355. And we're not quite halfway through it. Now the market has been struggling today with this weekly trading zone overhead, 3224/25. And that was the trade to target last night on CTAs and logic alerts. On a long alert, no matter if it's logic or concierge, on a long alert, the trade to target is always weekly trading zone overhead. On a short, the target is always the weekly trading zone below. So we got 24.25 overhead, and this morning in the pre-market strategy session, which was on this candle right here. Well, actually this one. We were looking for a pullback to the BBC, which we got. We talked about that. We said if it holds, that should send us higher, but we're going to run into red and falling, which is often good resistance. And as we can see, it was. I'm just refreshing my time frame. There we go. So we struggled at red and falling, and we struggled, and we struggled, and we struggled, and we struggled. And so now we've got price pinched down between the BBC and red and falling. So what we're going to see happen here during the course of the show is we're going to see price fail and get below the BBC. If that happens, then support is going to be right there. Initial support, okay. The make or break is way down here at this zone, 3228/29, where we right here is where we had the bullish cross that took us up. Okay, so that'll be support on the way down. But even if we get below the BBC, even if we get below this swing low, we've still got another area for potential support right here. So that's if price closes below the BBC. The other option is it closes above red and falling and closes above that swing high. Little window here. Okay. Oh, from about 33.19 to 33.21. $33.19 to $33.21. Now, if you've got bullish momentum at your back, in other words, if buyers are pushing this thing higher, there's no sign of weakness on your smaller time frame, then this might be the move that takes us beyond this swing high, to the zone. The zone itself, of course, it represents an area. Okay, so it was having an effect here, here, here. Question is are buyers committed enough to their positions to take this out, to take this out, and to take this out? On the daily, if we look left, you see we have nothing. On a daily chart, we look left. It's wide open spaces. Let's shrink it up a little bit. So the high of this candle is 33.23. Now this gap, we talked about this, I think somebody asked a question last night in the discussion group, or it might have been this morning. But you see this gap here? This gap never filled. The opening price of this candle, or the high of this candle, was 3,300. The closing price, the session before, was 38.50. So that's about a 38-point gap. Now, to close the gap, we need to reach 38.50. So if you follow the horizontal line on my cursor, you can see where that is. 33.38, right there. So that's what the market's trying to do. The market's trying right now to close that gap. Once the gap's closed, buyers are committed enough to their positions, will continue to climb, and then this is going to be a real difficult area to trade. All-time historic highs. On a daily chart, it doesn't look so bad, but it's what happens intraday on your smaller time frames, which is where you go to put on and take off your trades. This area becomes a real battleground, and there's always casualties. So use a hard stop and just stay nimble. Last night on the S&P, the alert was to be long 3302. Okay. 53302. And again, the trade to target overhead is the weekly trading zone. We didn't quite get there. We missed it by 3 ticks. However, what we did get was we did get an exit signal right here. Now the exit signal, that's when the step line, it starts out along, it'll start out on the left side of blue and climbing. See how it steps over, steps up, steps over, steps up, steps over, steps up. Right here, it stepped over, stepped over. Once that happens, the first red candle that closes below the step line, that's the exit signal, that's the exit signal price. So the closing price of that candle, 33.16. Exit signal, 33.16. So that would be 14 S&P points at $50 a point. That's $700 per contract traded. $14 from the entry to the exit signal. Now we did continue higher. The exit signal is this candle right here. Right there. Okay, so that's the story on the S&P. Let's go to the Dow. The alert on the Dow was to be long 26775. Two, 6, 7, 7, 5. Two, 6, 7, 7, 5. Initial trade to target, or not the initial trade to target, but the trade to target, the weekly zone overhead. It's always the same. So 900 minus 775, that's 125 points at $5 a point. That's $625 per contract traded. However, we traded above that. We talked about this morning in the pre-market strategy session, that if we could get above this area of resistance, then potentially we could see 27,230 today. All right, that's the Dow. On the Russell, Concierge Trade Alert was to be long 1517. Right there. Trade to target overhead 1521/22, that's weekly trading zone. Once price got above the zone, it held on the pullback, okay, and took us all the way up to 1533. So 33 minus 17, that's 16 points. $50 a point, that's $800 per contract traded. The NQ is the one struggling today. Still struggling. We've even got a bearish cross now on the NQ. That's the only one of the indices where we have that dynamic in place. Could it still turn around? Yep. In fact, this area right here, this is the make or break number for the session. Right here, 11030. In other words, the sentiment goes from sideways to higher, sideways to lower. So the NQ, the alert was 11098, which looks to be right about where we are. One 1098. If you have any questions, put them in the chat box. 11098. Okay. And from 98, we traded up to 144. So that's 44, 46. So 46 points is what the market made available. At $20 a point, that's $920 per contract traded. If you've earned the right to trade 10 contracts, then it's a $9,000 move. Well, how does one earn the right to trade 10 contracts? One at a time. All of our new members are given the 2420 blueprint. It sort of guides you through the process. Helps you write your business plan, your trading plan. Two very different documents, but both documents that you need. Okay. You say, well, I've never had such a thing before, right? That's why it's a good idea. Put it in writing, get it out of your head, get it on paper. And the blueprint helps you understand the difference between the business plan and the trading plan, and how to write both of those. Then your goal is, as you're writing the business plan and trading plan, which should take you probably a week or two, you're trading in sim as you learn the methodology and the strategy every morning for 2 hours in the live training room. Your goal initially is to put together 10 consecutive days in a row where you reach your goal in 10 trades or less. Once you accomplish that, the blueprint will give you the green light to go live with one contract. Now the goal is to earn $2,000. Increase the balance in your account to $2,000. Okay. Once you do that, you'll get the green light from the blueprint to add a second contract. Big difference between the first one and the second one is the second one is being added with profit you earned in the market, not your savings, not the money under your mattress. But you're adding the second contract with profit you earned in the market. Now, the blueprint will tell you when it's time to add number 3, number 4, number 5. However, you know, the fact that it's called the 2420 blueprint doesn't mean you have to stop at 20 contracts. Most people are pretty comfortable at 20 and often long before. Now, when you first go live, if you're taking 2 points a day out of the S&P, it's $100. Okay, which might have covered your lifestyle in the 50s or 60s, but probably not today. Once you add your second contract, the same 2 points. See, there's 2 ways to approach this. More points or more contracts. One you have control over, the other you don't. Whether the market is going to give you more points today or not, that's up to the market. The other way, you control how many contracts you're trading. Now, does the market always give at least 2 points a day, multiple times? And I'm just talking S&P. You could be looking at another market, the Dow, equivalent's 20 points, Crude's 10 ticks, gold's 10 ticks. Sure. Multiple opportunities a day. Now, this is the part that you don't have control over. You don't have control over how many points the market will make available to you on any given day. But you do have control over how many contracts you trade. So trading the first contract when you go live, those 2 points, it's $100 a day, but by the time you've earned the right, one step at a time, climbing that ladder, once you've earned the right to trade 10 contracts, that's $1,000 a day. Now, $1,000 a day puts you in the top 3% of wage earners worldwide. But I promise you that unless you earn your way up that ladder, one contract at a time. Now, I'm not saying our way is the only way. No, I'm just saying, I'm talking about this function of math and the psychology of trading. I just had a conversation with someone this morning. It's probably the most common conversation that I have. Hey, I was doing great in Sim. I went live and everything changed. Well, the market doesn't change. Price doesn't change. The strategy doesn't change. Indicators don't change. None of the rules or guidelines change. So the only thing left is you or me, the trader. And that change typically happens is between our ears. We either become more cautious or more risk averse, or we see things differently once we go live because now there's something at stake. Once you go live, if you have 2 days in a row back to back where you don't reach your goal in 10 trades or less, that's when you should book a mentoring session, a one-on-one session. Michael or myself will take a look at the trades you've taken, and we'll try to help you understand why you had those 2 days back to back where you did not reach your goal. It could be something you don't understand about the strategy or reading the indicators, or it could just be market conditions. So going from Sim to live back to Sim is not a walk of shame. It's a smart business decision. It's what everyone should do when they go live and hit that rough spot, and you will. Okay? Don't let it cause you to spin out of control. You got to stay in control of the situation. Understand what happened. Doesn't mean that you've failed, that you're bad, or any of that stuff. This is trading. If it was easy, everybody would do it. But trading's not easy. However, if you learn the strategy, if you learn that it's a business based on probabilities, and you never try to make it anything more than a probability, then you have an opportunity to actually build a successful trading business. So, back to the NQ. We went from, what was it? 11144. minus 11098. That's 46, okay, at 20, so a little over $900 per contract traded. All right, so we got that one done. We've done the S&P, the Dow, the Russell, the NQ. Let's take a look at crude real quick. Garrett or John, either one should show up here pretty quick. Let's see, maybe they are. Might be. Would gold have a window short on the 30 minutes, maybe printing? Let's look. There will be potentially a short trade on gold. Keeping in mind that the sentiment for the session is sideways to higher. If we take out the low of this candle, then there is a window of opportunity down here from about 2040 to about 2030, 2035. 2039 to 2035. That's a 4-point move. If it does that, that's $400 per contract traded. So while we're on the gold chart, let's go ahead and look at the CTA on that. I was looking in the audience to see if I see Garrett or John. Okay, John is here. All right. Let's see if I see Garrett. I don't see him. Okay, John, I'm going to get your mic open here in just a second. On gold, the alert was to be long 2045. Now, important prices, important areas are almost always tested. So by 2045. And so the swing high was 2070. So that's $2,500 per contract move. Now that's the entire move. $2,500 per contract. This initial move took us up to 2060. So that's a $1,500 per contract move. And then you'll see how price got back below the trigger. That's very common. Happens all the time. Nothing special about that. And might be on your question about shorting opportunity. We could be seeing another trigger. Okay. Now the difference between this trigger and this trigger is if we trigger again here, we'd be running into red and falling, which is potentially good resistance. On this trigger, you had red and falling above. It was far enough away that you could have taken this trigger knowing that you might need to take profit right here. Best rule of thumb is just take the long triggers when you've got the support of blue and climbing like this. That's usually, and this was a continuation of that original move. So you're looking at all-time historic highs. Okay, so on crude, the alert was to be long 41.90. And the trade to target was overhead at the weekly trading zone 42.50. That is the highest weekly trading zone for this week. Sometimes price will trade above the highest or the lower or below the lowest zone for the week, but typically by close of business on Friday, if it has ventured outside the bounds, it will move back in. So we'll don't know how the week will end up yet. We've still got 2 1/3 days left. Now we're pulling back to the BBC, and the weekly trading zone. So this should be good support until proven otherwise. Okay. So if price holds here, there will be a long opportunity up to red and falling. If we consolidate for a while, that's going to bring red and falling down lower, and you'll want to enter above red and falling, keeping in mind that the swing high up here is potential resistance if we get another leg to the upside. So from 41.90 we traded to 43.50. So this whole thing was a $600 per contract move. A $1 move, if we were to go to 42.90, I'm sorry, I misquoted that. From 41.90 to 42.90, right here, that's a $1,000 per contract move right there. If we make it up to 43.90, then that's a $2,000 per contract move. So from this low right here, nope, wrong tool, from this low right here up to the high of the session, we're at a 50% Fibonacci retracement of just the last leg up on the 30-minute chart. So we already had two reasons for the pullback to hold. BBC, weekly trading zone, it's all an area. And we just layered in a 50% Fibonacci retracement. So now that's three reasons for this to potentially hold. But we've got to wait for we're not just going to put on a long trade and hope that it turns around and hope that it gives us another leg. We're going to wait and see we're going to wait for it to happen. And then once it's happening, then we'll participate in it. That's kind of how our whole methodology and strategy works. Okay? If we do continue lower, if we get below this area, then there will be an opportunity to be short, but you got to remember, the second you get back to this 41.90 area, that's potentially another trigger to the upside. So for myself, rather than shorting it on the way down, I would prefer to wait and see it get below the trigger and trade it long, trading with the trend. If you want to take this counter trend opportunity, just keep this number in mind. All right, so that's crude. Silver. Let me open John's mic and see if he's ready. He usually jingles my phone. Hey John, you're muted on your end, so I need you to unmute yourself so that I can unmute you on this end. Okay, silver. Last night the alert for silver. Long 26.64. $26.64. That you, John?
Hi, Dwayne. It's Garrett.
Hey, Garrett. Welcome to the show.
Thank you.
How are you today?
I'm good, as far as I know. How are you?
Well,
you sound good.
Pretty good. Pretty good. Thanks. So we had a swing high right here, guys, of 26.87. So 87 minus 64. That's a 23-cent move. So that's about $1,100 per contract traded. And as you can see, we traded through this area of potential resistance. We actually put in a swing high up at 27.19. So 27.19. 27.19 minus the entry at 26.64. That's 55 cents. So that's a $2,700 per contract move. And that covers everything. S&P, Dow, Russell, NQ, crude, gold, everything. Here's the daily S&P, still trying to work our way through that window of opportunity. And price still being held down, being held captive here by red and falling. Remember, we either have to close below the BBC, we don't have a lot of room to run before we hit support, if we can open and close above red and falling, then we'll have a opportunity to the upside. Garrett, did you want to take the charts today? Do you have something you want to show
Sure.
us? Let me send
Why
them-
not?
Let me send them over to you. And John, I'm still trying to open your mic, but you're muted on your end. So I've got to get you to unmute yourself. Okay, Garrett, here we go.
Let's
Make
see.
presenter. Okay.
Let's see. Show my screen, and then I've got to move this other one over to the other side here.
So
Let's
who do
see
you
if
think's
that-
going to
there.
be Biden's running mate?
I don't know. I've thought Kamala Harris for a long time. They talk Kamala Harris, Susan Rice, whoever the reigning communist is. I don't know.
I think Barack Obama is going to be president again by proxy through his wife, Michelle. That's my thought.
By the way, that was the other one I was going to mention. Michelle Obama, and it's amazing that
Unfortunately,
You
that
know,
ticket just might win. It's probably the most dangerous ticket they could put together.
yeah, they get in there, and there's no question that somebody was saying that just before the election they'll replace Biden with somebody like Colin Powell. Well, Colin Powell is 83 years old, so he's probably still got it together. That doesn't seem like.
I think hanging on to Biden is probably, he's just such a great sock puppet. I mean, those who are really in charge, they can all, I mean, if there's ever been a president that was just simply a figurehead, this would be that case, that instance. I mean.
Oh yeah, and it's a rubber stamp. It's like, gee, I wonder if Joe will go along with this. It's like, sure, just tell him he'll go along with it. Doesn't matter what it is. I mean, he's not sending it. It's amazing. I mean, this whole thing is beyond my comprehension because I never thought
everybody should genuinely be very, very afraid. And I'm not a fearmonger. I'm sorry to tell you the truth, but you should be very, very worried about what's happening in our country right now and what potentially could happen over the next 4 years. I don't know that we would still have a country after 4 years with all of the liberal left. That's going to be such a crowded Oval Office. Just think of all the people that are going to be in there making policies,
you're going to
telling
have
telling
Valerie
Joe, here, Joe,
Jarrett.
sign here. Okay, Joe, sign this one. What was his name on MASH? Remember Klinger? No, not Klinger, but Radar. Remember how Radar would bring in all those papers for Colonel, what's his name, to sign?
Colonel Klink. No,
that was Hogan Searows. Colonel, can't think of his name. But anyway, Radar would come in and go, here, sign these. And he'd go, well, what is it? Oh, don't worry, just sign it, just sign it, just sign it, And he would flip through those pages and he would just sign and sign and sign. Somebody in the chat box, tell me what his name was. Colonel, I know you guys watch TV. Don't tell me you don't. Colonel Potter. Thank you, Tim. Colonel Potter. Oh, there was two. There was Colonel Potter and then there was the other guy. Just like there was two. There was B.J. Honeycutt and then there was the other guy. Or did they call them both B.J.? There's two different actors. That was a great show. I watched that show in syndication so much. Pick any show, any episode at random. I could probably do the dialogue right along with them. But I never got tired of it. It was just such a great show.
Yeah, the sign of a truly great show, huh?
Yeah. What you got going on your chart here? Tell us about it.
Well, I'm just looking at the weekly chart, and it's showing that we've been on a at least on my stuff there, a buy signal since early July. Typically that's a time to sell. I mean, in most cases,
away, all that.
yeah. And then right after the Independence Day holiday is generally a terrific time. July 7th is the day in July, which if you go back to early 1927 and come forward every year and do all the days in there, that's typically your high day when you want to be out, and then you come back in late in the month. But and then for August, it's getting out on August 1st. It's the earliest one of the year, and yet it here we are on the 5th, and we're moving right along. So everything's still headed higher on the weekly, and the daily.
Now we're pressing up against the all-time historic high. So, do you have any thoughts in general about markets, especially the S&P? How it behaves when it hits an all-time historic high? I've got my thoughts, which everybody knows, and that's just rejection, serious rejection initially on the first move up.
Yeah, generally when you hit that, particularly after you've had a long and extended move, you're due for a correction at the very least.
Right.
So, and here on the daily chart, I wanted to do this because, I mean, these are the Bollinger Bands. They're getting tighter. Mm-hmm. And when you're early in a move, like, for example, this point here is the middle of May. You've got your first move up, you get an ABC correction, and then it's moving up into that June high. And as you do this, you can hug the Bollinger Band all the way up, which is what it's doing. But then it kind of pierces it here, and then comes back and hits it one more time. Then you get a correction. And now it's worked its way all the way back up, and in probably the third wave of this, you're hugging the top again, and rollover got a divergent sell signal here, but it really didn't do much because it's, I think, in this case, a wave 3, maybe a wave 4. Now you're going up to do a wave 5, and this, might take a little bit longer too. I mean, to me, this is, I was thinking a little bit about the 20-year periods that W.D. Gann used to talk about. And if you go back 20 years, of course, you see the dot-com bubble. And if you go back 20 years before that, what you actually see is the gold move. And there you had gold move from, $250 an ounce in, I think, April of 1979. And then it started going pretty strong at the end of the year. And by January, which is only, 8 months later, mm-hmm. It goes up and peaks at 877. And then 2 years later, it's back down to 288, retraces the whole move. And of course, that's what happened in the dot-com situation 20 years later. Yeah,
well, the difference between the dot-com and now, or one of the many differences, is in the dot-com days, you had risk spread across thousands of tech companies and millions of investors. Even still, the shock was pretty widespread and well felt through everyone. But now we've got a similar situation, except that the risk is not spread over thousands of companies and millions of investors. It's spread over 4 stocks, 5 stocks, and tens of thousands of investors. So it's really a different picture. Is that your mic? I keep hearing a noise in the background. Is that you?
I don't know.
Right there. That noise right there. Was that you?
That was me touching the mic.
Okay. All right. I didn't know if somebody else was trying to get logged in or something. Okay. Go ahead.
The difference, I mean, there's a clear difference this time in that we have a coronavirus, a lockdown. We've lost probably at least 30% of our economy. And you have 5 stocks which are up something like 35% this year, right. And the 495 stocks, which are incredible companies. I mean, Berkshire Hathaway, Yeah, I mean, just name any large company that isn't any of those five, and you'll find it in that group. So incredible companies across the board, no matter what they are.
You need to get that?
You know what? Yeah, let me just check on that.
Go ahead. Go ahead and grab it. Okay, let me take a look at my chart. You can't see it. On the 30-minute, we have a little doji. We're going to get a new candle here.
Okay,
Are
I'm
you
back.
Okay.
Sorry. Let's see. So, you have, a real difference in the fact that it was spread across the board in 2000. But again, even then, the focus was in companies like Oracle and Microsoft and so forth. You did have a focus then in those companies being the main ones. The other thing that's happened now is that we do have millions of investors. And what's happened is this company, Robinhood, if you go back to March, ironically, here's a time period where people are in serious fear. The market's corrected 35%. People should be very afraid. And yet, E-Trade has a record month and gets 260,000 new accounts in March,
Right.
which is kind of a year for them, kind of like a year, give or
Right.
take a little, of what they would do in a year in 1 month.
Now,
Robin,
keep in mind that
Robinhood,
what also one of the differences is you do have all of these millennial investors that they're drawn in by the apps, and they're drawn in by the fact that suddenly there's no commissions. Now, whoever imagined a world where there would be no commissions? But a lot of those accounts, I would, and I'm just grasping at numbers here, I bet you 75% of those accounts have less than $5,000 in them.
it's funny. I don't know much about Robinhood, but here's something amazing. During that same time when E-Trade picked up 260,000 new accounts, Robinhood picked up 3 million new accounts.
Wow.
And that's, 12 times the amount. And I hadn't
You
even.
can open an account and start buying stocks on Robinhood in like 10 minutes.
Yeah, they don't care.
It's
with,
crazy. It used to take days and days to set up an account, but now, like that.
Yeah, and they do it with, in other words, if you want to trade options too, it's like, you
You can
typically.
enable for futures. That takes a day for approval. But if you just want to go in and buy some stocks, you can be live and trading, in 15 minutes.
Yeah, it's incredible. And this is something that's nothing like this has ever happened before.
No.
This is remarkable stuff. And my thought is this.
I heard.
Yeah, let's say because they keyed on March, because obviously that's where the most impressive numbers were.
Mm-hmm.
But let's remember that we've got April, May, June, and July that have already happened. So you've got 4 months beyond that March date. And if it was 3 million new people in March, even if it was less, let's say it was, 2 million and then down to 1 million, 2 million the next month, and then the next 3 months have been 1 million. Well, that's 5 more million new people over the last 4 months. I don't know what the numbers would be, but when you get 3 million, now we're no longer talking about hundreds of thousands. Then now we are talking about millions of investment just with what we know, and from people have been locked down certainly from March. So to assume that there would be less of that happening with the market going up, my guess would be, I don't know what those numbers are, but I think that they would continue to surprise us in the amount of new accounts. I think that the people that were there before March, which were new people, were telling their friends. Now you've got 3 million new people in March that are telling their friends. So to assume that there'd be a lesser number without the market falling apart, My guess is that there's millions more, and whatever that, how
And
many
you,
millions,
and
I
you and
don't.
I both know what's about to happen is this market is going to hit a brick wall, and there is
Oh
going
yeah,
to be a deep retracement, which we haven't had in a while, and all of those new accounts are suddenly going to, everybody's going to head for the exit because nobody, half the people on Wall Street have never traded a bear market.
oh, at least half. I'm thinking. I don't know what the number would be because you've got people that have been around for a while, but there's a good argument to be made that, I mean, I don't know what the number would be, but I think I could safely say 60% of the people in the market today have never even seen a bear market, much less know how to trade one. They don't even know what one looks like. Now, granted, you gotta look at one in March at that low from, you got a 1 month decline that should have shaken people up. But frankly, the bulk of people were just starting to get involved. So they weren't really getting hurt by that. Now, in the article that I read, there was, it looked like a young black man, I don't know, in his 20s or 30, whatever, probably 20s, with a family. It looked like a picture of his wife and a young child, and he had lost 860,000 with Robinhood, which brings up the question: gee, I wonder where he got the 860,000. At that age, regardless of, I'm not talking about because he's black.
That's when they had a glitch in their software that mistakenly allowed people to over leverage themselves. That was a bug in the software. They've corrected that now. And are you talking about the young man that took his life? Is that the one you're talking about?
No.
There was a young man that lost about 800,000, took his life because he just felt so horrible. And according to what I've read, they would have never held him accountable for that money because of the glitch in the software kind of thing. So it's very tragic. But I think there'll be additionally tragic stories that come out when this market goes into a deeper retracement. And a deeper retracement doesn't mean the bull is dead. It just means the bull needs to rest.
Yeah, that's right. And, there's probably a very good argument for, we've had the longest bull market in history, so it's certainly due to top at some point. And with what's happened, I don't know how you recover from this. And then the argument that's out there, that's a pretty good argument. I mean, it's a horrible argument, from our perspective, when you can go back and look at arguments. I mean, and that argument is, well, where else are you going to put money? And you go, well, great argument. That's true. But it's a horrible argument in the sense of, if that's your best reason to invest in a market that's way overvalued, that's not sooner or later that's going to become a very bad reason, or a very expensive reason. It always is. There's nowhere else to put your money. And why is that? Well, it's because they've engineered ZIRP, zero interest rate policy, in keeping interest rates down, because they've done such a miraculously bad job of managing the country. In other words, we're a country, we produce things, we ought to be able to produce them at a profit. And if we can produce at a profit, we as a nation should be creating a profit. And yet, we're a nation run on debt. Theoretically, why shouldn't we have a surplus? And the answer is real easy. Because we have politicians running the country. That's why. But it doesn't look like that's going to change. And the future, the one thought that I heard today is that in the next election, Chuck Schumer, who I think should have retired a long time ago, but anyway, Chuck Schumer is probably going to be challenged by AOC. And, what's not to like about a not very intelligent bartender that, because I think there's plenty of intelligent bartenders that probably ought to have her seat. But you've got her there. You've got these young women that really aren't experienced, don't have a clue as to how the world works. And for some reason, we've gone through the rotational process where somehow young women with no business experience who are socialist / communist motivated are now popular to elect as leaders. And you have the Tlaib gal, this black gal that just won the election in Missouri. I mean, they're popping up all over the place, and I'm wondering who's voting for these people. I mean, I'm thinking, certainly young women could vote for them, but why would adult men or women vote for inexperienced children to run the country? It just doesn't make any sense. And
I hate to say it, but a lot of people are voting based on color.
Well, that and the other people,
If
there's
you're
a whole
a
lot of
person
people.
of color, you have an advantage in this election cycle.
Yeah, I mean, it's remarkable. And the other thing,
And some
that
would say,
people are
well,
voting-
the old white men, they've had the edge, forever. Well, I'm not going to deny that either. I'm just stating a fact, I guess.
Well, I'm thinking, well, gee, I mean, there's no argument. This is a white Christian nation. That's what it was founded on. And by the way, thank God that it was, because of that, because of the tradition and the qualities and the belief in God and the belief in patriotism and love of your country and belief in, for the most part, not lying and following the golden rule for a long time, this country became great.
Well, where the golden rule got twisted up because it was interpreted as he who has the gold makes the rules.
Well, there's two golden rules, of course. I mean, there's and those are the two.
Right.
There's a lot of truth to who has the gold makes the rules, and I think that's what we've been suffering from for a long time, because he who has the well, this gets into lots of other stuff we probably shouldn't even bring up, but
Biden's not even going to show up to accept the nomination. I read this morning. He's going to accept it virtually, broadcasting live from his basement, I guess.
Can you imagine not having a presidential? Can you remember in your life not having a presidential debate before an election?
No, but they're saying now that it's always been stupid and it never made sense. And
oh, sure, yeah, that's right. And
that right there.
What an embarrassment.
They would be better off to send Joe and put one of those little things in his ear, and then have a group of smart people, backstage somewhere, feeding him
really
the answers.
sad.
Because for him to just say, no, I'm going to break the tradition, that America has enjoyed for so many years, and not debate Trump, that's going to be. And I know they'll play it up and make it look pretty, but that's
I think
such
what
a
you're
sign
gonna-
of weakness.
I think what you're going to hear him say is, look, everybody knows what a horrible person this guy is, and I'm not going to degrade myself by debating him. Something like that will come out of Joe Biden's mouth. It won't come out of his brain, because I don't think he can think that up. But somebody will plant that in there and say, hey, listen, this is just, you've seen how CNN and MSNBC have lied about Trump. I mean, again, the other thing I was going to mention, that they're voting for color, but one thing that people have always voted for, and I mean throughout time, and I say this lightly, but a smile.
Mm-hmm.
Well, he's got a pleasant smile, and he just seems like a nice person.
Right.
I said, pardon me for interjecting, but this is the person who's going to run the country. Oh, yeah, well, that's okay. I want somebody nice. I mean, by and large, that's what won the election for Barack Obama. I mean, he really did a great job of pulling the wool over people's eyes for somebody who really never had a legitimate job. When you put down community organizer as what you've done, that's just an embarrassment. What that means, and of course, nobody's thinking anymore, so nobody bothers to think about it. But had they thought about it, it doesn't matter whether you like the guy or not. So this isn't about a popularity, although it is about a popularity contest. But the point is, the guy, when you say you were a community organizer, that's not something that a person who truly has a resume would ever list. You would list it, well, I was vice president of this, I was that. You know, I worked for, you know, the Bank of America for 15 years, you know, whatever it is. They would put that down. He put down community organizer because he never had a job. And it's amazing. And we allowed that to happen for 2 terms. And there's a terrific video that I saw. I'll send it to you. I don't know whether you can post it on your site where other people can see it. But
Yeah,
it was...
yeah, send it to me.
Yeah, it's really remarkable. I'll send it when I get off here. But it's a black gentleman. I think his last name is Little. I didn't know him, but they were showing him with a group of black people, apparently that Trump met with, and this gentleman, and he's an intelligent young black man, said that. Something he was saying, I believe that you are the best president since Abraham Lincoln. And there was a nice positive exchange. And he said, you know, something like, they joked about Trump being the first black president. Then you see Jimmy Kimmel using that clip and saying, well, I guess orange is the new black. You know, Kimmel.
Right, yeah. I know
then, so that's what happened. But the rest that happened right beyond that is the young man named Little. I believe that was his last name. He came on and addressed it, and they showed that clip, and they said, and his comments are to Jimmy Kimmel, and he brings up the fact. He says this president has been far and away the best president for black people by a long shot. This guy has actually created results, and he's helped our community. He's done this. The guy really, really laid it out. You know, I noticed last night.
How did Jimmy Kimmel respond?
Oh, he did. He's not going to respond. You know, he does. He's not going to respond when somebody beats him up, and they're right. He's got the benefit of having the TV show. So he can, just like CNN. CNN will pick and choose the news to report. There's lots of news out there. Much of it they don't report. Jimmy Kimmel's the same. He will report.
What in the world are they going to do with themselves if Trump doesn't win? I mean, they've spent 4 years broadcasting Trump 24/7, all Trump all the time. MSNBC, CNN.
Oh, if he doesn't win?
Yeah, if he doesn't win, I mean, you know, they've had him to pick on for 4 years.
Oh, they have,
they'll be out of work.
But oh no, then they'll be in their heyday. Now they'll be able to say whatever, you know. In the past 4 years, they've said whatever they want, but all of it has been. And this is what people should pick up on. I tried to point that out. I said, when else has that ever happened? Number one. Number two, when would that ever make sense? Unless you had a horrible guy who was just so bad that everybody hated him. Yeah. And I said, neither one of those are what's happened. So, I mean, it's, but I think it would be a heyday. It'll be happy days. You know, it's like remember when Hillary was going to win by a landslide? How Rachel Maddow and all these people, they were just exuberant. Oh boy, Hillary's going to win. We're going to have Hillary following Obama, and they couldn't have been happier. That's what it'll be like when if Biden wins. I think CNN will be overjoyed, and you'll see they'll go from a negative consistently pushing to get rid of Trump to to something very positive. Now, will it be positive for the nation? Of course not. But they will have essentially won their deal. The New World Order at that point will probably be a given. And these people obviously have been promised, the news media is going to be there to, and there's a very good, that just dawned on me, about a 15-minute video of a woman from Yugoslavia. And she was brilliant in trying to give a warning to Americans. And she said, this happened in my country, Yugoslavia. She said, when the wall came down in Berlin, a wave of freedom went across Yugoslavia.
Right.
However, I'm sorry, a wave of freedom went across Europe. And Yugoslavia, of course, wasn't free. It was communist. And they had to think, gee, how are we going to deal with this wave of freedom? I mean, this is going to smack us right in the face. So what they chose to do was to change their communism to socialism and make it national socialism. Mm-hmm. So that's what they did. So they didn't change anything. They didn't give up any power. They just changed the face from, oh, nasty, evil communism to we're national socialists. We all love this, don't we?
Right.
And they'd point a gun at your head and say, we all love this, don't we?
Well, some of these young folks that are voting a socialist ticket, they should really talk to some of the people that have lived in socialist countries. So far, it hasn't worked out anywhere.
Dwayne, if you can't get them to do any real research on their own, which you can't, and it's not just, I don't blame the, I tell you what.
Now there's a movement to ban the history books so they can't read about it.
It's fun, yeah. The next thing will be the book burning parade, but
they're already burning Bibles. There's a video online now of Antifa burning a bunch of Bibles.
Oh yeah, start with number 1 and work your way down. But I've got faith in the youth of this nation, which means there's probably something wrong with me. But no, I say that in all seriousness, even more so than the older people, because I'll tell you why. We've got, very close friends who are, very liberal and some, people don't talk politics, but which is sad because people should talk politics. But anyway, the very liberal. And I realize that they don't have a clue about what's going on. I realize that if they watch TV, they're watching CNN or MSNBC, and of course they're removing much of the news. They don't know anything about the FISA documents. They figure that Trump was guilty with Russia. They just don't know anything. It's incredible. They're listening to, and remember, CNN and MSNBC said Trump is guilty right away.
If you repeat something enough times, people just start to believe it.
Yeah, I mean, they don't have to wait. At any other time they said, well, let's wait and see what happens on this, but this is a pretty scary situation. You realize, by the way, that Ukraine is doing a criminal investigation on Joe Biden. You aware of that?
No, I
criminal investigations going on right now on Joe Biden in the Ukraine. You see that on the news? No, but it's happening. Anyway, what I was going to say, though, is that I've lost faith in these older people. I'm talking people, 50 years and above, because you can't talk to them anymore about this stuff. But the youth, and thanks to my daughter, she has brought in stuff to me daily on her little, whether it's TikTok or whatever. And here's these young kids talking about just this stuff that's going on. I mean, they're really way more clued in than their parents with all sorts of stuff that's going on. Now, granted, some of them are out there with the Black Lives Matter and couldn't tell up from down, but there's a certain group of these young kids that are getting it. And so I'm going to stick my faith in them. I'm going to go with the youth because, the bottom line is we're not going to be able to do much. Not nobody listens to us anymore. So, it's got to be the youth. It's always the youth that's got to save a nation or kill a nation. And I'm encouraged to see and surprised to see that there's a bunch of these things out there where these young people are actually pretty clued in. So anyway, I'm gonna keep my positive thoughts in their direction, because frankly, they're going to have to be the ones who make this happen. So anyway, let's see, what else do I have for you? One other chart.
Okay.
Have we got time for me to do one other?
Sure, yeah, we got plenty of time. Go ahead. John logged in, but he's got his mic muted on his end. John, if you're listening, I sent you a message. I sent you an email.
Let me go over here. The chart I wanted to show you was this one, I think. Yeah. This is this indicator right here in the middle is the one that kind of gave this signal here at February 20th and the buy signal down here at March 23rd. And it's been setting up very similar to the pattern that happened leading into February, except for the fact that this one's much bigger. The initial sell over here before the February sell had this W pattern that I pointed out before. And then, of course, it's a buy here. And this is the buy going into the ultimate sell here. If we move over here, we have the sell over here at June 8th. You get kind of an elongated W pattern. You can see the two W points and then this internal part, which is from the high down and then back up. And over here, same thing, the high down and back up, but stretched out. Then we cross over and get the buy signal here and are still on that buy signal. And this second pattern is kind of a rollover pattern. This one here stayed above the yellow line, and this one has come down to it on a couple of occasions, but you still have that pattern, low here, rolling up here, back down, and then once again above the line. So once this turns and goes through the line, my guess is that's when we'll have the turn. My long-term targets actually come in later this month. So they've got a little bit of time. And when I look at the NASDAQ looks to me like it's here. You know what? I can drag this over. I guess I shouldn't say these things before I do them, but I think I can drag this over. Let's do this. Can you see that? Let me see if I can do it. This is the NASDAQ, and everybody's got their own Elliott wave count, but it looks like it's a 1, 2, big wave 3, ABC 4, wave 4, and then 1, 2, 3, ABC here. And then we're moving up. It looks like where we are today is going to finish off a wave 3 up. We should get a correction after that, and then maybe move up to a higher high, and that should then finish this off. So who knows, how long. I would think that this wave 3 that
starting yesterday, the NQ began showing some weakness compared to the other indices, and that has continued into today. So
in which
the market followed the NQ up, and it just may follow it on the way back down.
Yeah, the NQ's up through 0.38%, and the S&P's up 0.5%. So yeah, they kind of swing back and forth. But I think the NASDAQ is in the process of finishing its third wave probably today. I don't think it gets past tomorrow, and then we should get whatever kind of correction we get. and then have another drive up. And my guess would be if that happens, we're getting pretty close. And who knows? Maybe those millions of new guys at Robinhood and so forth are maybe there's enough of them to be picking up some of these big five stocks that the big owners may be willing to take profits on pretty quick. So we'll see. Haven't seen it yet, but that's kind of what I'm looking at there. But I'll jump and let you get on to bigger and better things.
John's getting ready to join us here in just a second. I called him to let him know that his mic was muted on his end. So no, but if you got to run, no, that's fine.
I do. Yeah. Say hi to John for me. It's always nice to talk with John.
Let's see if I can get see if he's there yet. I think he had to log out and log back in, because I don't see him in the chat box anymore. So
I'm going to send you those.
Okay.
I'm going to send you those videos that I mentioned to you. I think they're really I think they're not only worthwhile but necessary for people to see. So I'll send those as soon as I get off. I'll send both of those to you.
Okay. Sounds good, Garrett.
Okay. Thanks.
All right, man. Thanks for joining us. I'll talk to you soon.
My pleasure. Bye.
All right. Let's go back to the chart. S&P. Here we are on the daily, still pretty much the same spot. Trying to claw our way higher. We're above this resistance. Okay. It took 1, 2, 3, 4, 5, 6, 7, 8, 9, about 10 sessions. Finally get above that. Now, this one. So, the trade is to the long side on the smaller time frame on the ES. On the 30-minute. Hey, John.
Hi there.
Yeah, Garrett finally left. But anyway, so
yeah,
how you doing?
There's a kind of a thing that keeps. This is a new thing that hasn't popped up before, where it always says I have to sort of unmute. But anyway, we're there. Yeah, look, I think this market is just, in spite of what Garrett was saying, this market is just way too strong, and it just seems to push higher every day. I wouldn't. We may get if we go a little bit too crazy this afternoon, we might overshoot tonight. The metals are potentially running into a bit of a trouble here. The gold stocks actually are down sharply today. They've reversed, which is not a very good sign. It may mean that we could have a shakeout ahead. We're right up there on the 27. That was our target on the silver. 2050 or so on the gold. 2070, sort of 2100. Kind of potentially a place where we could have a short, sharp correction. But I did call it a while ago and said that we might be on a juggernaut ride all the way to 2700. I think if that happens, the silver will get to the 35s, possibly even touch. This thing could really go totally crazy and go up to 50. 45, 50. I think the silver is going to go to new highs in this, before the end of the year. Also, I think that there's some things going on that are going to increase the demand for silver. New technologies that we probably didn't even know about yet. Remember, the solar is a pretty big user of silver.
Is it?
In of itself, and the right now the commercials are caught in the biggest short squeeze of all time. So we just have to, we just got to play it the way we normally play it every day. But we've come off quite a bit on the gold. I've kind of got some good stuff developed here for catching these turns, and we caught it this morning on the high end. not the exact high, up around about 2060 or so. Got a sell signal there. We're down to 2047 right now. Same on the silver, about a little bit higher sell on the silver, about 27.1, and we're down to 26.8. So, but if we do not rally further today and we go down more, the likelihood of a pullback increases somewhat. There are stocks that are just going, but I think I told you, I got a very powerful buy. Last week I got a very powerful buy on the Nasdaq, which manifested itself, and then since then I got a very powerful buy on the Dow, which is up pretty sharply today. It's been up 400, and this was a really, really powerful buy signal, indicating possibility of the S&P going up to the high you were talking about, to a new high potentially, or double top.
Right.
We were talking about earlier on.
Right.
Remember, our target was about 11,300 on the Nasdaq. We're 11,110 right now, so we still got a couple of hundred points upsides ahead of us potentially. The Nasdaq is stalled at the moment, and the Dow is moving. So the Dow is starting to become the last man standing, which is definitely a problem for the market, because that's the way these tops tend to get formed. And Boeing came out today. I got a buy signal on Boeing the last couple of days, and it's up. It's not taken off dramatically yet, but as you know, as people who listen over the last few months know, that we've called every rally on Boeing very well, and we call the highs too. And here it looks like here we go again, because the Boeing's actually acting really well today. They came out with an announcement saying they don't see an immediate need to raise cash with new debt, and that really is pushing the stock higher this morning. The vaccine stocks are an enigma. They're difficult to trade. This last night, this NVAX went berserk. They went down initially, and then they had a conference call, and it was up about 25% or something. It's pulled back a little bit today, but looks like it's gearing up for a retest of the highs.
Which one, John?
It's up around 100. I think it's the most valuable vaccine stock right now. It's up around.
Which one are you talking about?
Almost 180 today, I think.
John?
More than that, maybe 190.
John?
I like BNTX.
Hey, John?
Pulled back a little bit this morning. It's potentially trying to go higher again. Marina, what is it called? Moderna is not acting well today, which scares me, when trying to buy because it's kind of a bellwether, and when this thing is, going the opposite way, it's hard to buy the vaccine stocks with a lot of confidence. However, Inovio, which we've talked about from a lot, is actually structurally looking to me very bullish. Got to buy. I actually said to people to buy it at 21 on a break this morning, and if they want to bold enough to buy it, pretty much on the dip, the first tip, they came in with a double bottom, just above the 20 or around the 20, and it's pushing 22 right now. It actually looks really bullish. I have a feeling this stock's going to be a contender, a really major contender. They're the only vaccine that has the DNA that sort of separates it out. It's getting more publicity all the time as being a contender. It's sort of getting molded into the top 3, top 5. Another thing that's going on today is another thing that's going on is the SRNE, which is Sorrento, which has been moving up quite live. A test. It takes 30 minutes. It would be an absolute game changer if that's practical. just got upgraded a couple of days ago. It's currently around 14 or so, and it got upgraded to 24. So that's a pretty big deal, 24 to 30. Somebody's obviously done some work on that. It's pulling back a little bit right now. It might be a little bit vulnerable today. I wouldn't personally buy it right now. I'd buy another upside reversal if that happens later on today, or I'd buy it if it made a new high today. But right now I'd be a little bit careful. Another stock called HCNP is a very interesting story. I've been watching this stock in the past. Sorry, HZ, Zulu, HZ. We got a buy signal on this. You see the way that thing is capped up?
Yeah, I see it. Yep.
Yeah, right. It's. I mean, I think this stock's going to go a lot higher. It's really kind of blew away some of its expectations, and these kinds of moves, you know, for what it's worth, why don't you put up? I mean, look at the gaps in that, you know, from May, and now we've got a huge mega gap here. If you look at IMMU,
Here we go.
you know, you get a kind of a sense of where we're going, and you know, IMMU is pushing all-time highs here, and it's probably going to gap up like HCNP, you know, past 50. It might even go to 100. They're talking about this company taking half the breast cancer market.
Wow.
Which is gigantic.
That is.
And as you know, if you could want to put Lilly up, LLY.
Mm-hmm.
Lilly, you know, Lilly supposedly came out with some very good news this morning, where they, you know, they've got a therapy against the COVID that potentially is a game changer as well, and it stops the infections cold. Yet the stock went down. So, you know, but you know, they went up on the breast cancer issue as well. I think you've got to be what's the word, mindful or alert to the possibility. I certainly would buy this stock if it came out with something more positive here and started turning around again. Because
So
if you remember the last time we got a buy
up.
signal down at 140,
It was trading up
and
in
it
the
opened
pre-market.
$16 higher the next day and went all the way to a new high, and then it pulled back. You know, remember, it's a very big company, so even though it's got a breast thing and the breast cancer thing and the vaccine, you know, there's other parts of the company that may not be performing so well. So I guess that's probably why it's, and GILD, you know, they keep hyping the remdesivir, and, you know, it probably, you know, I'm sure it certainly saved a lot of lives, but it's not the silver bullet, you know, that it's been cracked up to be, because the stock's just not reflecting it. And so...
Can you hear me, John?
Yes, no, I can't hear you, Dwayne. Thanks for asking.
Can you hear me now? Can you hear me now?
I just realized. So that's kind of, and here we are now. We're starting to push higher on the Nasdaq again.
Can you hear me now, John?
So it just goes on, and you know, we're 5th day of August, I guess. You know, middle of the week. We're up again on the middle of the week. So you know, we've got to get through. No, I can't hear you. No.
Okay, do you have your headphones
So
on?
we're up against the news coming out tomorrow on the jobs and things. So that could be a problem for the market. You know, that's probably the worst thing ahead of us right now. And you've got, I mean, obviously this 3 trillion, 1 trillion, whatever it's going to be, probably positive for the market on the other side of the coin. Yeah, my headphones are plugged in. Everything's normal, but
Interesting.
well, listen. Thanks very much for the invite. Might as well wrap it up.
All right, John.
And maybe come on
Have
tomorrow.
a great afternoon.
Thanks
I
very
hope
much.
you feel better. Take care. Okay. Bye-bye. Okie doke. All right, we covered everything. S&P, Dow, Russell, NQ. You name it, we've been there. S&P just off the high of the day. Inching closer to being halfway through this window of opportunity. Now, we get to the top of this window, that doesn't mean price is going to slam on its brakes. But remember, this is an area, and I got a feeling we'll spend a whole lot of time jockeying back and forth, back and forth. Ultimately, we get an initial rejection, and then we just work it and work it. This could last weeks, months, who knows. But with the presidential election coming up, whichever way it goes, that should bring some real volatility to the markets. S&P still fighting the good fight, trying to get through what's been a cap on the market all day. This is a great example of weekly trading zones. When I say it's an area, weekly trading zone, just like fibs is an area. Okay, fibs put an exact price point on your chart. But still an area. Now, this morning we talked about this last leg up, that when price pulled back, we would be looking at 50% Fibonacci retracement. And we are. Actually, I think that was a different market. It's one I talked about earlier. All right, here's the Dow. Last night's alert on the Dow was 26775. The Dow's cruising to the upside, unlike the S&P. It's going to try one more time. Okay, this is what happened on the first attempt. Here's the second real attempt. Third. Here we go again. One more try. Crude failed. Crude is the one we were talking about. That 50% fib. Just the last leg up on the 30-minute chart. We've now traded below the 62. We talked about getting short here would be a counter trend trade, but acceptable on the 30-minute chart because we're below the BBC. And as we came close to the long trigger, we caught a bounce. So personally, I would still wait to see if it's going to drop below the trigger again, and then based on market structure, depending upon how far we move below the trigger, it won't require a lot of risk to participate in that trade. Gold needs to get above red falling. Nice window of opportunity there. Silver, same thing. But look at how every one of these moves ended. Boy, price really got rejected up there. So, you know, if you trade this long, don't stay long. Too long. Because there's no guarantee that it's going to make it through this time. But it does look like it wants to give it a try. Down here, I won't talk about the slingshot much on these time frames, but we just crossed below the 50. Now on the next candle, if this thing turns back up, when you have, like over here, let me show you what I mean. This is a perfect example. See how price dipped below the 50-yard line and then turned right around? See how we dipped and then popped right back above that 50-yard line, and it led to all that, right? So that could become, this could end up looking just like that. That would require this turning back up, getting north of the 50-yard line, and then maybe we do take out these swing highs, because the next resistance is about 27.45. Yeah, 27.45 on the upside. So there's that window up to those highs. And then once we get above those highs, then there's this window. Yeah, something like that. Okay. Crude still heading lower. The Dow not breaking down. We just looked at gold and silver. Take one last look at the NQ. NQ needs to break that trend line to the upside. And then small window of opportunity right there. A little bigger one up here. The one I'd rather participate in would be the one up here. Right through here. But that's going to take some time, if that happens. So the NQ showing the most weakness, trying to recover. The last one we'll look at one more time, the Russell. Russell, moving on up. The next weekly trading zone, the highest weekly trading zone this week for the Russell is way up at 1594. That's a lot of room to run. This trade, 1535, should be good up to 1548. We have a current alert out on the Russell. Let me check. Yeah, just triggered. Russell long 1535 to 1537 to 1547 to 1594. This alert right here just triggered. We're already at 1536.6. So it's off to a decent start. Yesterday, we talked about dealing with difficult people. We all have to deal with difficult people from time to time, and sometimes we are the difficult people. I know I can be. Ephesians 4:26 says, "Be angry and do not sin. Do not let the sun go down on your anger. Give no opportunity to the enemy." God designed us in such a way that in times of intense difficulty, we have a built-in moment to turn to Him for help. The primary place in your brain that processes strong negative emotions, such as rage and fear, is called the amygdala. That's a word. A-M-Y-G-D-A-L-A, amygdala. True story. Now, when that part of the brain is removed from certain animals, they become incapable of expressing rage and fear. Normally, when input comes into your brain, it goes to the cortex for processing. In about 5% of cases, however, when something extremely emotional happens, it goes to your amygdala, and the thinking part of your brain gets short-circuited. But in between your brain's intake and your body's response time, there's what researchers call the life-giving quarter second. And that quarter second, although it doesn't sound very long, is huge. Ephesians 4:26, Paul writes, "In your anger do not sin, and do not give the enemy a foothold." That quarter second, is the time when the Holy Spirit can take control. Remember we talked yesterday about being beside ourselves with anger? There's that split second before you're beside yourself. It's an opportunity to remain whole. Think about that. Quarter second. Not long, but long enough to make a decision. That 1/4 second in your mind can be an opportunity to say, Holy Spirit, I've got this impulse right now. Should I act on it? And then wait for the answer. It's amazing how the desire to hurt someone you love can be so strong. We've all heard that saying. We always hurt the ones we love. The ones we love are the ones we hurt the most, kind of thing. Okay. Here it is. It's amazing how the desire to hurt someone you love can be so strong and then lead to such pain when you indulge it. Ask OJ. But another piece of good news is that when you blow it, and you will, I will, we all do, it's part of the human condition, God sends another 1/4 second right behind the first one. He's committed to you, and He'll keep working with you until you get it right. And that's our good word for the day. Okay, let's see. I gave you this recap at the top of the show. I'll give it to you again. Week 105 so far, Logic 247, 57 alerts, 40 actionable, 6 have been stopped out based on not risking more than $300 per contract per trade. What we averaged over the last 105 weeks is 20% being stopped out. That's where we are this week. Now, if I jump into the alert channel and scroll up to Sunday night at 6 p.m. Eastern, that's when the channel opens for business, Sunday night, 6 p.m. Eastern. Last week, week 104, we had a total of 119 alerts, of which 90 were actionable, 13 were stopped out, so that's 14%, based on not risking more than $300 per contract per trade. So Sunday night, this past Sunday night, 6 p.m. Eastern, we had 6 carryovers that all found their target. And then this was the first alert that came out Sunday night. Crude, Russell. Thumbs up means price got to the target. Russell, or the Z's means that one never triggered. And the red X right there means it was stopped out, based on not risking more than $300 per contract per trade. These are all ones that we're waiting on a disposition from. That's gold. That was to be short. Went from 85 to 82. It's $300 per contract traded. That was silver, stopped out. British pound. Copper, no trigger. It's crude. Gold. If you're on the trial, you have access to the channel, so you see the alerts come out live in real time as they happen, as it unfolds. Everything's right there for you. Okay? If you need any help with anything, call Valerie at 949-42-EMINI or send an email to support@cfrn.net. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. 3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.